There is a sentence, 7 words, that the banking industry does not want you to say, that the property tax office does not want you to say, that your Medicare prescription plan, your utility company, your state revenue department, and 2 additional institutions collecting money from you every single month are counting on you never saying. The sentence is, I'm over 65, what am I exempt from? That is it. 7 words. And the reason those 7 words could save the average American senior between $3,400 and $9,200 per year in fees they were never legally required to pay has nothing to do with the exemptions being buried in obscure regulatory language. The exemptions are not concealed, they are published, they are codified. In several cases, they appear in the same document that authorized the fee in the first place. The institutions collecting these fees are not uninformed about your eligibility. They are aware. They have been aware for years. They maintain compliance departments that monitor exemption eligibility criteria. They have internal policies that authorize waiver authority for qualifying customers. The information exists inside those organizations right now, fully documented and ready to be applied the moment you ask. They are counting on you not asking. Before walking through all 7, hit the like button right now, not when the video ends, because the financial services industry, the utility sector, and the property tax collection system all benefit from this information remaining invisible to the people it affects most. Every like on this video is a signal. Every share reaches 1 more senior before the next billing cycle arrives. Subscribe and press the bell. This channel exists for the people the system counts on to stay quiet. Standard disclaimer, this video is educational content, not legal or financial advice. The specific exemption rules, income thresholds, and application procedures vary by state, institution, and individual circumstances. Verify every item on this list with your specific provider or a qualified advisor. But verify because the alternative is continuing to pay for something you were never legally required to pay. 7 fees, 7 exemptions, 7 conversations to have before this month's statements arrive. Fee number 1, the property tax you are almost certainly overpaying. This is the largest item on this list, and the one with the highest probability of applying to you right now, today, regardless of your income level, regardless of your home's assessed value, regardless of which state you live in. 49 of the 50 states in the United States offer some form of senior property tax exemption, reduction, freeze, or circuit breaker program. The specific name varies. The mechanics vary, the income threshold varies, but the underlying principle is consistent across nearly every jurisdiction in the country. If you are 65 or older and you own and occupy your primary residence, your state or county maintains a legal mechanism to reduce or freeze your property tax assessment. The average annual savings for seniors who claim their state's primary property tax exemption ranges between $1,200 and $4,800 per year depending on the state and the assessed value of the property. In high property tax states including Illinois, New Jersey, New York, and Connecticut, that figure climbs higher. In Illinois specifically, the senior homestead exemption combined with the senior assessment freeze can reduce a property tax bill by $3,000 to $7,000 annually for a qualifying homeowner in Cook County. The application for this exemption is not automatic. In most states, you apply once at your county assessor's or auditor's office, submit proof of age and proof of primary residence, and in income-tested programs, provide the first page of your most recent federal tax return. The application is typically 2 pages. Processing time is typically 30 to 90 days, and once granted, the exemption generally renews automatically or with a simple annual confirmation. The county assessor maintains access to birth date information. They know which homeowners in their jurisdiction qualify for an exemption and are not currently receiving it. They do not send those homeowners a letter. They do not include a notice with the annual tax bill. They collect the full assessment and wait. Navigate to your county auditor's or assessor's website after this video. Search Senior Exemption, Homestead Exemption, or Senior Freeze. Download the form. If you have been paying full property taxes past age 65 and have never applied, most states allow retroactive claims covering 2 to 3 years of overpayment. That window is open right now. Fee number 2, the Medicare Savings Program gap. This applies to an income range that is broader than most people assume and narrower than most qualifying seniors realize they fall within. The Medicare Savings Programs, specifically the Qualified Medicare Beneficiary Program, the Specified Low-Income Medicare Beneficiary Program, and the Qualifying Individual Program, are federally funded programs that eliminate or substantially reduce Medicare Part B premiums, Part A premiums where applicable, and in certain cases Part D cost sharing for seniors whose income falls below defined thresholds. In 2026, the QMB income limit for a single individual is approximately $1,255 per month in most states, and approximately $1,704 per month for a couple. The SLMB limit is approximately $1,478 per month for a single individual. These are monthly income thresholds, not annual figures. Critically, the income counted under Medicaid rules excludes certain categories, including some Social Security income adjustments, veterans benefits in many states, and irregular income sources. A senior whose gross annual income is $18,000 may carry countable income under Medicaid rules of $1,400 or less per month and qualify for QMB with their Part B premium eliminated entirely. Annual savings, $2,220. They are almost certainly not enrolled. The enrollment rate for Medicare Savings Programs among qualifying seniors is estimated below 40% nationally. The primary reason: nobody informed them they qualified. The Social Security Administration, which handles enrollment, does not proactively identify qualifying individuals and initiate outreach. State Medicaid agencies, which administer these programs, do not systematically cross-reference Medicare enrollment data against income eligibility at the individual level to trigger contact. The system is passive. The senior must apply, and the average senior does not know to apply. Call your state health insurance assistance program, SHIP, for a free eligibility screening. The number varies by state and is available through the federal SHIP locator at shiphelp.org. The call takes approximately 20 minutes. Annual savings, if you qualify, can exceed $2,000. Zero cost to apply. Zero justification for waiting. Fee number 3, the prescription drug cap. The pharmacy is not tracking for you. The Inflation Reduction Act of 2022 established a $2,000 annual out-of-pocket cap on Medicare Part D prescription drug costs beginning in 2025. In 2026, this cap is fully in effect. Once you have spent $2,000 in a calendar year on covered Part D drugs, counting your deductible, your co-payments, and your coinsurance, your cost for covered prescription drugs for the remainder of that calendar year is zero. Not reduced, not discounted, zero. The pharmacy point-of-sale system does not always apply the cap correctly in real time. Billing errors, plan coordination delays, and data synchronization gaps between the drug plan and the pharmacy mean that some seniors who have reached the $2,000 threshold continue being charged co-payments they legally owe nothing for. And more commonly, seniors who are approaching the $2,000 threshold in November and December are making decisions about which medications to fill and which to delay based on cost, without knowing that the next dollar they spend may be their last required dollar of the year. The fix is direct. Call your Part D plan's member services number in September or October and ask, "What is my current year-to-date out-of-pocket total toward my annual cap?" If the answer is close to $2,000, fill everything you need before December 31st. If the answer exceeds $2,000 and you have continued being charged co-payments, you are owed a refund and must file a coverage determination request immediately. The plan will not call you proactively. The plan will not flag your account to alert the pharmacy. You must track this yourself and ask the question. Fee number 4, the state income tax your retirement income should not be paying. 41 states do not tax Social Security income at all. 9 states currently impose some level of state income tax on Social Security benefits. But even residents of those 9 states are frequently overpaying, because every state that taxes Social Security maintains an exemption threshold, a partial exclusion, an age-based deduction, or an income phase-out that significantly reduces or eliminates the tax for the majority of middle-income retirees. Full taxation of Social Security at the state level is almost never the actual rule. It is the worst-case interpretation of it. Beyond Social Security, 27 states offer full or partial exemptions on pension income, retirement account distributions, or both. In Georgia, the first $65,000 of retirement income for a single filer over 65 is excluded from state income tax. In Kentucky, the first $31,110 of retirement income is excluded. In Mississippi, all qualified retirement income is excluded entirely. These exclusions are claimed on the state income tax return. They require specific form entries or schedules. They are not applied automatically. A tax preparer unfamiliar with senior-specific state exclusions will miss them. Tax software not updated with the current year's exclusion amounts will miss them. And a senior preparing their own return without knowing the exclusion exists will miss it entirely. Navigate to your state's Department of Revenue website. Search retirement income exclusion or pension income exclusion. If your state offers one, compare the exclusion amount against your reported retirement income on last year's return. If the exclusion was not claimed, file an amended return. In most states, amended returns can be filed going back 3 years. Fee number 5, the utility bill reduction nobody applies for. The Low-Income Home Energy Assistance Program, LIHEAP, is a federally funded program that assists low and moderate income households with heating and cooling costs. The income eligibility threshold is 150% of the federal poverty level or 60% of state median income, whichever is higher. For a single-person household in 2026, 150% of the federal poverty level is approximately $22,590. 60% of state median income in most states is significantly above that figure. A single senior with annual income between $28,000 and $36,000 may qualify depending on their state's applicable threshold. LIHEAP benefit amounts vary by state, with annual benefits ranging from $300 to $1,500 in most states. But LIHEAP is only the federal baseline. Every major utility company in the United States operates its own low-income senior rate program or senior discount program. These programs are governed by state Public Utility Commission rules and are frequently not advertised to existing customers. The income thresholds for utility company senior discount programs are often higher than LIHEAPs, and in some states apply automatically to any customer over 65 who requests a rate review. Call your gas and electric utility company. Ask specifically, do you have a senior rate, a low-income discount program, or a budget billing option for customers over 65? If yes, ask what documentation is required to apply. Annual savings across heating, cooling, and electricity can range from $400 to $1,800, depending on your climate zone, home size, and current rate category. This call takes approximately 12 minutes. The savings are recurring annually. The information will not appear on your bill. It will not appear in your annual rate increase notice. It will not appear anywhere unless you call and say the 7 words. Fee number 6, the bank fee that disappears when you ask. Monthly maintenance fees at major American banks range from $4.95 to $25 per month for standard checking accounts. Annual cost, $59 to $300 for a senior on a fixed income who has maintained the same account at the same institution for 2 or 3 decades. This is money leaving the account every month that the bank has no legal entitlement to retain if the customer requests the appropriate account type. Every major American bank, Chase, Bank of America, Wells Fargo, U.S. Bank, Citibank, offers a senior-specific or senior-eligible account tier that either eliminates the monthly maintenance fee entirely or reduces it substantially. The eligibility threshold is typically age 62 or 65 depending on the institution. The application process is a phone call or an in-branch conversation. These accounts are not promoted at the branch level because branch staff incentives are structured around new account openings, not account type migrations. The senior who does not ask will never be told the fee-free option exists. The senior who has been a customer for 30 years and calls the customer service number with a complaint about a monthly fee carries a high probability of having that fee waived indefinitely if they ask for a senior account review. Additionally, credit card annual fees ranging from $95 to $695 for premium cards are subject to retention waiver authority at every major issuer. If you have held a credit card for more than 2 years, carry a clean payment history, and call to cancel citing the annual fee, the retention department has authorization to waive the annual fee, issue a statement credit equal to the annual fee, or downgrade the account to a no-fee version without closing it. This is internal policy, not published consumer disclosure. The call script is 4 sentences. Call the number on the back of the card. Say, "I'm considering closing this account because of the annual fee. I have been a customer for X years. Is there anything you can do to waive the fee or reduce it?" Then stop speaking and wait. Fee number 7, the notary fee that is illegal to charge you in more states than you realize. Notary fees at private notary services range from $5 to $25 per signature for estate planning documents, powers of attorney, healthcare directives, and real estate transactions. The documents seniors require notarized most frequently. The cumulative notary cost across a single planning session can reach $75 to $200. In 22 states, banks are required by state law or by their own operating charters to provide free notary services to account holders. You are an account holder. Every time you paid a private notary to notarize a document that your bank was legally required to notarize at no charge, you paid a fee the law did not authorize. Beyond banks, county recorders' offices in most states provide free notary services during business hours for documents to be recorded with the county as deeds, liens, property transfers. Many public libraries offer free notary services for patrons. Many senior centers provide free notary access on scheduled days. Social Security Administration field offices will notarize certain documents for benefit-related purposes at no charge. The entire private notary fee economy for seniors exists because most seniors are unaware that free alternatives exist within a reasonable distance of virtually every residence in the country. Call your bank's branch. Ask, "Do you provide free notary services for account holders?" If yes, schedule your next document signing there. If no, call the county recorder's office and ask about walk-in notary availability. Then call the nearest public library, the sentence that connects all 7. Write down the name of your county, write down the name of your bank, write down the name of your Medicare Part D plan, write down the name of your gas and electric utility, write down the state you file taxes in, write down the name of every credit card on which you currently pay an annual fee. That list represents 7 institutions that may be collecting fees from you right now that they are not legally entitled to collect from a person who is over 65, who qualifies for an exemption, and who knows to say the 7 words, "I'm over 65, what am I exempt from?" Say those words to your county assessor's office and ask about the senior homestead exemption. Say them to your Medicare ship counselor and ask about Medicare Savings Programs. Say them to your Part D plan and ask about your year-to-date out-of-pocket total. Say them to your state tax authority and ask about retirement income exclusions. Say them to your utility company and ask about senior or low-income rate programs. Say them to your bank and ask about senior account tiers and fee waivers. Say them to your credit card issuer and ask for a retention review of the annual fee. None of these calls requires an attorney. None of them requires a financial advisor. None of them requires anything except a phone and the willingness to ask a question the institution already knows the answer to. These are not edge cases. These are not programs designed for exceptional circumstances. These are mainstream financial exemptions that apply to tens of millions of seniors right now, today, in every zip code in this country. The combined annual value of these 7 exemptions for the average qualifying senior is between $3,400 and $9,200 per year. That is not a rounding error. That is a car payment. That is a vacation. That is the difference between a retirement that feels stable and one that feels strained. The institutions collecting these fees possess the actuarial data. They know the exemption utilization rates. They know that for every senior who calls and asks, there are 9 who do not. The passive revenue from the 9 is substantial, recurring, and essentially permanent, because those 9 will continue paying until the day they die and never once know they were never required to. Like this video and subscribe to Retirement Watch USA so you never miss the financial and regulatory information that affects your retirement income directly. Share this video with one senior, a parent, a neighbor, a friend, anyone paying bills on a fixed income who has never once asked their bank, their county, their Medicare plan, or their utility company what they are exempt from. One person today, because the 7 words are free to say. The institutions are open right now, and the billing cycle does not wait for anyone who is almost going to make the call next week.